Welcome, everybody. My name is Anthony Kazazis, and I am the director of the NYC Network Group, as well as the NYC Real Estate Expo. And I would like to thank everyone for registering for today's NYC CRE Outlook Today and Tomorrow webinar. Today, you'll hear from the top commercial real estate veterans on how they see things now and in the future. Our guest panelists today are Jessica Zaski, is the Senior Vice President, Co-Head of Acquisitions at ACADIA Realty Trust. Based in New York, ACADIA owns and operates street retail and open-air shopping centers across the country. Jessica sets investment strategies and oversees acquisitions, dispositions for both the REIT and the fund platforms, with particular focus on New York City. Welcome, Jessica. Susan May-Mclean, Managing Partner at Horizon Land Services of New York, LLC. Susan is the founder for over 20 years at Horizon Land Services. She and her office do title insurance on commercial and residential closings nationwide. Her team, all for but one, have been together for 13 to 21 years. Welcome, Susan. Nina Roket, Partner, OLSHAN, WOLOSKY, LLP. Nina is a national recognized commercial real estate lawyer focused on leasing, lease, and loan reconstruction, conveyance, and finance transactions. Nina acts as a trusted business advisor to companies and investors. Welcome, Nina. And Wendy Silverstein, co-founder of Silver Eagle Advisor Group. Wendy has over 30 years of broad real estate experience in debt and equity capital markets, public and private, debt reconstruction, acquisitions, and dispositions. Welcome, everyone. So without further ado, I'd like to hand it off to Susan May-Mclean. Susan?
Thanks, Anthony. And thanks for helping us pull this all together. And Wendy, Nina, Jessica, I'm so happy that we're getting to squeeze in a little bit of time together on Zoom. Where I thought this would go today is our New York and real estate is such a moving target, and you each bring so much information and expertise to the table, and your educated guesses on what is to come is very interesting to me, definitely, and I'm sure anybody else who is on this Zoom with us. What's gone on 3 months ago to now, so many things that we never expected. I didn't expect to see the city bustling again the way it is, and people are coming back from Florida who I thought would stay forever. Restaurants are opening up, people are more comfortable, and this is impacting real estate here in a really big way, where it's coming back, but there's still so many questions in reference to retail leasing, the apartments. Do you see things being implemented as far as getting people back in the office, and how the New Jersey is impacting, and nationally, mostly Jessica, you have a lot of information on that, how that's going to be impacting the real estate market right now here in New York. So Wendy, would you like to start telling us about what you're seeing from your point of view?
Yeah. Well, listen, I think you put it well, Susan, in that for those of us who are sitting in New York or nearby in New York, we can see the change is palpable, that the weather's nice, people are out, even Midtown, which has been deserted, is starting to feel alive, and there's traffic. So outwardly, things are looking so much better, and of course, that's great. But the truth of the matter is a lot of what we do takes place inside, in inside buildings. And it's not necessarily quite as cheery a story once you get inside. And I'm sure we're going to hear from Jessica. But for instance, you know, street retail, which was already hurting in New York City before the pandemic. And so it's great to see people back on the streets. And people on the streets, pedestrian traffic is what will bring back true retail, street retail. But there's no question in my mind, and of course it's all open to debate, the street retail fundamentally has to reprice. And that's a much slower process, because in order for the street retail to reprice, the landlords have to capitulate and the tenants have to be willing to come in and pay whatever the new market rent is. And I'll just quickly compare and contrast that to multifamily. So in our line of work, we, even in New York, saw a lot of rental distress, particularly in downtown Manhattan, in FIDI, et cetera. People left the city, left their apartments. We had huge vacancy rates. And while I can say that in a lot of these specific cases, vacancies, rentals are back up to about 90% occupied, but the major difference is net effective rents are still much, much lower because of the concessions that were given during COVID. People who were never able to afford to live in the city started coming back, but the net effective rents are still showing the pain, if you will, and that's going to take a lot of time to recover. And so what we haven't really seen yet is a lot of office distress. For the obvious reasons, office leases are much longer, and I think there's still a big question mark, and there's a lot to talk about what employers are facing as they make these unprecedented calls about what they can and can't do, what they should and shouldn't do with respect to demanding people to come back to the office, questioning whether or not they're vaccinated. It's a whole new world. And so it feels good, the streets are alive, but there's still a lot of rubble underneath that's got to be cleaned out. But Nina and Jessica, I don't know what you guys are seeing.
Yeah, I actually agree. And, there's a lot of activity. There's activity across the board, whereas, even a month or 2 months ago, there wasn't much of that. But if I talk to my landlord clients, my office landlord clients, or a number of people that I know in the brokerage community, there's activity, but that's not yet translating into deals. So I think what we're seeing now is all really positive. We're seeing more people back in New York City. We're seeing a huge increase in demand for apartments. But to Wendy's point, the rents are significantly lower because of the concessions, I think, that many multifamily landlords are giving to their tenants. The office landlords are still very much in this gray area because they're seeing this activity, but they're still getting uncertainty from their office tenants as to, well, I don't necessarily want to commit to a 10-year lease, but maybe I'll sign a 3-year lease with some flexibility. And while this all plays out, to Wendy's point, a lot of the behind the scenes is still somewhat in flux. And that means that these deals that, we'd be hoping to see by now are still, the runway for these deals, I think, are longer than maybe what we would all expect to see. But the good thing is it's moving in the positive direction. It's moving, with the idea of New York City is going to come back. The question will be, to what extent will it be back to the way it was before? And quite frankly, it'll probably be back, but just in a very different way, certainly on the office leasing side. And I'm seeing that as well in the flex space world. Before COVID, I really did a tremendous amount of work for flex space operators. And I think now more than before, those operators are being called in to say, you know what, I think that model works. And I think with office tenants now not wanting to commit to long-term deals, the flex space model might even be more of an opportunity for them today than it was before COVID. So it's interesting to see. Again, it's great watching the activity, but I'm just not necessarily seeing the deals just yet. But I'm hopeful that with more time, and once we come into the fall season, more of that will start to kick in.
So retail has sort of been in this area of some level of uncertainty, or just in the doghouse for the 3 years leading up to COVID. And, I'm underwriting an office building with high quality retail at the base right now, in a prominent location. And I have an office partner, and I turned to my analyst a couple of days ago and said, it's almost a relief to have someone there with you, where office almost has more uncertainty on some level than retail, just from the perspective that, retail, we sort of, the 3 years leading up to COVID, and then certainly through COVID, actually clarified a lot about who's successful and who's not, and what purpose brick and mortar retail serves. And it's different, obviously, in the suburbs and in the cities, and in terms of the drivers, et cetera. But office, I think there's a little bit of a longer runway, Wendy and Nina, what you were saying as to, where are employers ultimately going to settle? They want to do shorter term deals now, because is everybody ultimately going to realize work from home isn't working for them, or is it going to become a permanent, feature at least a few days a week? And retail, I think we had to ask a lot of those hard questions leading up to COVID in terms of what does the brick and mortar store, bring to the whole omni-channel equation for these retailers. I think we're at ACADIA, and I'll just speak specifically to street retail for a minute in New York, certainly been a little bit slower to show green shoots in terms of leasing activity, but we saw the more suburban pickup probably, just in December of 2020. But in the last few months, it's been really strong. It's been driven by, we do have some leases. Actually, we just finalized a lease in Soho, but we're seeing luxury retailers come out. It's a lot of touring. We're seeing a lot of the quick service food come back, and restaurant operators in general. It sort of came from the low lows, and now you have money that's being raised around supporting restaurateurs, rebuilding new concepts, etc. We're seeing fitness again. But as I said, a lot of the luxury retailers, a lot of the international brands that were already, now they're looking to upgrade, they're looking to move neighborhoods. A lot of it really is taking advantage, certainly, of the supply-demand dynamic. And Wendy, to your point, the fact that if you are able to sign a lease and commit, and they know how valuable having the street retail presence is, whether it's on Madison or Midtown or Soho, now seems like the time in terms of locking in a better, historically very, very desirable rent from the retailer perspective.
Jessica, I'm going to ask you the question. It's a free for all, right, Susan?
Yeah, it's a free for all, and I have one too. Go ahead.
So, and again, I don't want to address any specific properties. Everybody knows ACADIA owns wherever they own prime retail. But if you pick a neighborhood, so let's pick Soho and Madison Avenue, only because they're so well known. Fifth Avenue can be really tricky space location. But if you're at prime Soho or prime Madison, what percentage delta are you seeing from peak to trough now when you're signing the lease? So I'll throw out a number. Soho peaked at what, 800? I know sometimes it was higher, but generically is 800, 1,000? What do you want to say was a peak?
Yeah, I think 800 is probably.
So 800, where can somebody get, let's call it really high quality, and we're only talking street level, because obviously one up, one down, you change different price. Are we at 200, 250, 300? Where are we?
So I think it's really, again, that's why retail is so specialized these days. It's street by street. Broadway, for example, is experiencing a lot of the challenges that other street retail corridors in Manhattan, as well as across the country. I'll use Michigan Avenue in Chicago as an example. They're having a similar challenge because a lot of it is large format space that typically was leased to mass market mall type tenants like a Hollister, Abercrombie, Topshop, Forever 21, a lot of tenants that, Victoria's Secret, were hot at one point and are either not, don't exist, or some form of bankruptcy, or just aren't active in terms of signing new leases. So, that's the challenge. So you could say certainly prime Broadway was in those, nearing $1,000 a foot. And is now, off as much as 50, 60%. I mean, it depends. We own a very strong corner on Broadway, and if you own a strong corner on Prince or Spring, you're going to be much more competitive. And I think that's really the issue, is there's a bifurcation of the haves and have-nots. Yeah. And so a lot of retailers are going to say, look, I'm going to hold out and just not sign if I can't get the best location. Yeah. And I think, some will try to really get a good bargain, and then others will, pay up, again, still not near the peak, but will stretch within reason.
I think it's super important that landlords like you guys who, you're public and you have to do what you have to do, but it's a big benefit for New York City that when there is capitulation on both sides of the equation, but it's how we're going to get new and vibrant tenants in who maybe when it was $800 a foot, because we all know in a rising market, the best is the most expensive, but everything else around it tends to rise as well. And to your point, some of those are not going to hold up as well as Maine and Maine. But if rents do drop to 200 or something's affordable, that to me is exciting for the city, because it means young entrepreneurial businesses can afford to take the risk and come in and open a store. And that's what's going to bring our streets back to life. And that's what's going to make New York City, great again. So I think it's a positive.
Yeah, I think, along those lines, there's enough different streets and different spaces that I do agree that there's room for everybody. And maybe you're not going to have a very young entrepreneurial brand, on Broadway or Spring or Prince. But why couldn't they be one block over on Crosby or,
Exactly.
a little further south? So I think there's room for all. I mean, a lot of landlords are structuring leases, us included, or having those conversations that you're ramping up, right, over the course of several years. Or look, we're very sensitive. We've caught on to the retailers across the board, from luxury to discounters and everything in between. They're thinking about occupancy costs, despite, sort of this urban legend that it's just all marketing. And certainly a New York City store, especially in a tourist-driven area, is more than just four wall, but profitability still matters. You're not going to want to run a store that you're in the red. I'm not aware of, virtually no one wants to do that these days. So, we want to work with people and we want to underwrite for future deals, but we want to work with existing tenants or potential tenants, to get them to a space where they can make money and they can have a sustainable business at that location. So I do think it's, turning into more of a cooperative effort between the good landlords and good tenants.
Right, understood.
Do you think that from what other conversations that I've had, that there is the philosophy that there's more value right now, possibly in a building, to not lease out the space, because Manhattan is a moving target and the values seem to be changing with, for example, tenants and residential, and that's soon to spill over, or some think, into the retail space that maybe in preparation for selling a building, it's in a developer's best interest to not lease right now and hold on a little bit longer, or to lease?
I think it really depends on the building, depends on the debt on the building, right? Depends on what flexibility the developer might have. I'm working with a client right now, really interesting building in Brooklyn, and working on 120,000 square foot lease. And this landlord has made the decision that for this type of tenant, it made it best sense for this building, for this landlord, to go ahead and move forward with that deal. Another landlord might decide to wait for whatever reason. So I think it's an interesting concept and idea, but from what I'm seeing, I think most landlords are willing to lock in deals, even if perhaps they might not be at the highest rents, or quite frankly at lower rentals. But if they can lock in deals where there's cash flow and there is income coming in for the future, I think that's where most landlords are at today. At least that's what I'm seeing.
Yeah, I mean, real estate is a high fixed cost business for obvious reasons. You always have to pay taxes. Chances are, you're leveraged, maybe highly leveraged. And so vacancy generally is just an expensive proposition. So I've seen it happen when you're in a rapidly rising market. And if you're well capitalized, you may play the waiting game a little bit. But I think in the market that we're in today, to Nina's point, if you can get a cash flowing tenant in there, and maybe you don't have to sign a long-term lease. And I think everything today is, there's so much change going on that people want optionality all around. And so Nina was referring to flex office space, which has normally been provided by the famous flex office providers such as WeWork, Notel, which is now owned by Newmark. I don't know what they're calling it, Regis, and some of the others. But make no mistake, what the market change has been is that tenants are asking for shorter term leases, because for a variety of reasons, they don't know what their long-term needs are necessarily going to be. But major owners and landlords are going to start, by necessity, also giving shorter term leases. This is not going to be the business of just the WeWorks of the world. It will be the business of the major landlords. not that they're turning all of their business into flex, but a portion of the space that they have will be dedicated to shorter term leases. And, you know, they have to take this on. They're not turning over that piece of the market to the flex office providers.
Yeah,
So-
and you're seeing that with a number of landlords already, you know, developing that business model in-house.
And is that gonna be considerably less in terms of TIs or other dollars, just because you get the shorter term cash flow?
Well, it's going to be more, from what I'm seeing anyway, I think it's going to be more like, it's not going to be a custom built. It's almost as if, you know, this is the money that we're putting in, and it's going to look the same whether, you know, IBM takes the space or whether, you know, entrepreneurial Newco takes the space. So that's where I think the landlords are going to like save money. You know, they're not going to be spending tremendous amount of dollars in investing in a lease for anybody where the term is only committed for 3 years.
Mhm.
Exactly. So it's, listen, it's a very dynamic market for a market. I mean, real estate and office leasing, dynamic was not a word you'd apply to it, you know, 5 years ago, but it's gotten a
That's
lot
true.
more so.
So true.
Well, I also wanted to touch on people coming back to work and the hybrid situation or full-time in the office, and what you are all hearing or experiencing yourselves with dealing with that and participating in it.
So I could talk. So as a law firm, you know, it's something that we've been dealing with for quite some time, and really just trying to understand really what is it that our members, our people want. You know, what is it ideal for the productivity of the firm? How is it that we could best service our clients? And you're seeing a lot of law firms come out with variations of pretty much the same thing, which is some level of flexibility. But the general idea being that most people want to come back into the office physically. Most employers want their people to come back into the office. So I think what we're doing is somewhat in line with what most other firms and other companies are doing as well, which is continuing to operate somewhat voluntarily in the office through the summer, but then come Labor Day, again, depending on everyone's schedules and, you know, individual needs, the idea being that there will be at least, you know, 3 days in the office with flexibility for other days. Now, whether that will continue, we'll see. And we're taking a wait and see approach. Like everything is changing so quickly. It's almost impossible to know where things will be, forget, you know, 6 months from now, 3 months from now. So that's kind of the approach that we're taking. I've been going into the office pretty regularly, about 3 days a week. And it's worked well for me because I just, you know, like the idea of being in a physical location. So we'll see how it ends up being, but I think most companies in New York City, and, you know, to Wendy's point, when you're seeing more people in Midtown, it's because I think more people are getting more comfortable with getting back into the office. I think we'll see a lot more of that come after Labor Day, though.
Nina, what are the legalities if you're the head of a firm? What does the law, if there is even any law established yet, allow an employer to do to either require people to come back to the office or potentially lose their job, get vaccinated or not, identify, if you can't force them to get vaccinated, can you ask people to identify whether or not you've been vaccinated? Like, what are the rules? Because
it's all over the board. My understanding is you can require employees to get vaccinated in order to come back into the office. We have not taken that approach. Our approach has been, we're highly encouraging everyone to get vaccinated, but we have not taken it to the next step, which is you must get vaccinated to come back into the office. And most firms are, I think, taking that approach. Although I've heard other companies also take the position that in order for you to come back into the office, you must get vaccinated, which is perfectly legal and fine for the companies to do. We just haven't, you know, done that just yet. And I think people generally are looking to make sure that everyone is comfortable, yet also operating in a safe way. So and we've just done an informal survey, most people have gotten vaccinated at this point, and time will tell as to what we need to do further if by the time we come fall and most people or not everyone is vaccinated, if we'll need to do everything or anything different than a very strong encouragement on vaccination. But it's also like we're all waiting and seeing to see what everybody else is doing, because you don't necessarily want to, be out there and taking the lead on this, because obviously it is a very delicate situation.
So if you have employees who are vaccinated and others who are not, the ones who are vaccinated are not in their offices and wandering around with masks on, but can you require the ones who are not vaccinated to wear a mask all day?
Yeah.
You can.
Yeah, that's the approach that ACADIA takes is, again, we're strongly encouraging everyone who can be vaccinated to be vaccinated, and we're back pretty much full time with a flex option on Fridays. So, what I found is that real estate firms, this won't come as a shock to anyone on this Zoom, tend to prize in person, in office, be at the physical location. That's a priority. And I joked during COVID, I was back in around Labor Day last year, Midtown was like a networking event just walking down the street because it was only real estate professionals.
So true.
Sushi Ann at lunchtime outdoors was like, you didn't need like the conference. But for ACADIA anyway, we've tried to be a little bit less forceful and keep people comfortable, but also say, look, we think that we perform best as a team together, generally in the office. And we think that would be great if everyone could be vaccinated. And by the way, if you'd like to walk around without your mask on and join others who are vaccinated in conference rooms without masks, please submit a copy of your COVID vaccine card to HR. And, we've achieved a very high level of fully vaccinated, and we haven't had, many issues there. I do wonder, I don't know if we have any of these instances at ACADIA, but I do wonder, Nina, as you said, people who choose not to be vaccinated and then their office says, well, you can't come back in until you're not, sort of, are they just in perpetuity working from home? How does that, I guess time will tell, but how does that end, right?
That's a great question. And I think it will depend in large part as to kind of, is that a one-off situation or is it more in mass? And if it's more in mass, then I think the company will need to come up with a policy that works. If it's a one-off situation, I think that person will need to be addressed based upon the facts and circumstances surrounding that individual. It's a very difficult, very, very difficult situation from an HR perspective, because of course, health and safety, first and foremost, the most important thing. And then you just need to work around people's level of comfort. And then if you have most people in the office and they want to walk around comfortably if they've been vaccinated, and then if they hear that there are one or two individuals who are not vaccinated, well, what does that mean for the rest of the people who are back in the office? So it's very tricky, and it's very difficult to navigate. And every single day you see a new policy come out or a new memo that's put out there. And I think the best that we could do right now is gather the information and really digest it and take the next couple of months to see kind of where things land, and hopefully be in a position come the fall where we'll be in a better place to make a decision for the company on a going forward basis, at least through the end of the year. So I'm hopeful that will be the case. But it's very difficult.
My personal opinion, and particularly when talking about this issue in reference to New York, because obviously everywhere in the country, people have to face these issues. But if you think about the profile of the person who previously lived in New York, worked in New York, especially younger people, because I know there's been some controversial statements made about only the people who are least engaged in their jobs want to stay home. I'm not touching that with a 10-foot pole. It is a controversial statement. But if I think about New York in particular, and you think about what a young person does in order to be able to live in New York, they live in an incredibly small amount of space for an incredibly high amount of money. Why? Not because they want to be sitting in their apartment, because they want to be going to the office, they want to be networking, they want to be going to the restaurants, they want to be out and about. So I feel like for those who are going to come back and live in New York, they're by definition going to want to come back to their office, because otherwise it doesn't make a lot of sense. Maybe I'll be wrong, or I think in other places in the country. And so perhaps if somebody's left their New York City job and they've gone to move to Salt Lake City, where they're hiking and skiing and living in much less expensive apartments, maybe they'll want to work remotely for the rest of their time because they have no intention of coming back to New York. But if you're in New York, I gotta believe you want to get out of your apartment, go to the office for all the good things that entails, and be out and about and having a good time. So I guess we'll wait and see.
I think we've all done the best we can with working remotely, and I think we've all been able to figure out how to make it work well, and we've done a great job at it. But when you're in the office, no matter what your age, you feed off of one another. That's where you're growing. When you're hearing somebody on the phone with an issue and everybody can jump in, and that's where I look back at my history of my career, and I think if I had been sitting in my apartment, there'd be no way that I would have been able to have learned as much as I had and form the relationships that I formed that are so important to me now. A hybrid situation is wonderful, because if you take away remote access from everyone, there's an upside to that. There is no commute. There is being able to work with your sweatpants on, and it brought a lot of good. So doing a little bit of both, I think, is where I'd like to see us land. But, no matter what your age, we get so much from one another being in one another's spaces. The upside is too huge for it ever to be eliminated.
Absolutely. And I fear that the younger talent, they've missed out a lot, right, from working from home, because how do you build your contacts on a Zoom, right? How do you network with one another on a Zoom? How do you develop a relationship with your mentor, with your sponsor, with your colleagues? Very, very, very difficult. But on the flip side, you're right. I think the talent will dictate really how they want to work in the future. So as a smart employer, I think, and really as real estate professionals, we really need to listen to that so that we could adjust and accommodate those needs. Because clearly there's a space, there's going to be a need for physical space. The question will be how best to utilize it going forward. And I think really where and how we learn that will be from the young talent coming in. And I think as smart employers, smart real estate people, will need to really take that to heart so that we could pivot and build around it. It's just that it's going to be a different new way of working for sure. In presence, physical space is necessary. But to your point, Susan, as well, I think a lot of the younger generation do want some level of flexibility.
And I also think it's going to put pressure on landlords in a way that is okay, because landlords, I don't think many of them, some of them did, but many of them didn't really consider themselves to be in what I'm going to call the service/hospitality business.
Yeah.
And that is going to take on a much greater part of the thinking at the senior levels of management for landlords, is what else can they be doing, not just keeping the building clean, that's become basic, obviously, and sanitized, but to really be more hospitable so that the experience of coming into work is more enjoyable, because now we are talking about people who have choices, and the choices are, in some cases, more relaxing. You're at home. And so I really think you're going to see a lot of the best landlords up their game with a little bit more of a viewpoint towards hospitality service.
Yeah, it's the landlords and the employers, right? I think tech started a lot of that, because it used to be you got out of a great school or MBA program and, banking or something in the investment finance world was where you went. And now, a lot of the starting salaries at a Facebook or a Google are just as attractive. The hours are maybe slightly better. And, they have wonderful lunches and workout classes and meditation and all sorts of perks that, you know, it's, I guess people I wouldn't have thought, I wouldn't be looking for that when I got out of school, and now it's sort of the expectation. So it's, everyone has to, across the board, up their, just like retailers have learned over the past several years, you sort of have to up your game to keep people coming
And
back.
the rentals as well. I mean, now if you're trying to rent an apartment, everyone, do you have a pool? Do you have a basketball court? How is your gym? You know, your standard Bing and Bing co-ops, they don't have that. They've got charm, but they don't have the things that the younger people are looking for. I did have a question, and I could be wrong on this, but I was always under the impression in office space, you needed 600 square feet per employee, or that was the average. Am I wrong, Jessica, in that?
Wendy's the expert, but I'm going to go
Wendy.
under half.
And now, and if that is true, I'm wondering
Not
with
even-
everything that's,
It's not even close to being true, to be perfectly honest with you.
oh,
That's
okay.
an enormous number, but just to use one example that goes back, geez, a very long time. I'm going to say close to 20 years, when Michael Bloomberg built the Bloomberg Tower, which is on Lexington Avenue. That was unheard of at the time because the actual physical space per employee was a very low number, like 80 square feet, because they were sitting in a tight cubicle arrangement. But yet, and to Jessica's point, the open spaces, the architecture of the building is amazing. It still looks great today, and it's 20 years old, but the open spaces and the gathering spaces where there was food and places for people to congregate obviously made the per capita a little bit higher. But that was the first time I ever saw where you really had a small. Now, WeWork would say they took it to 60 feet. I don't think they really did. A more typical average used to be about 250, 300. But that's all coming down because Nina could speak to law firms used to have an enormous amount of space because every partner was in an office with an assistant in front of them in square footage. None of that exists anymore. So the numbers before COVID were drastically coming down. Densification was a very big trend. Some of that is going to reverse because of health concerns and also because you just don't need to be that densely, put together when you're not going to have 100% attendance almost any of the week. And so it's going to move and shake. I think net, there will be a shrinkage in each company's required footprint, but not as drastically as you might think.
Yeah.
Do you agree with that, Nina?
Oh, absolutely. Yeah. I mean, before COVID, what I was seeing was probably about, as people were looking to become a lot more efficient with space, I was seeing about 150 square feet maybe per person. But I think time will tell now to see if people will maybe try to be a bit more generous with that, with those calculations or not. I don't know. I don't think people are going to be making any long-term decisions until we're at least, I don't know, another year plus out, because everything is still so uncertain. Will we need to get revaccinated? Are these vaccines going to last? How long are they going to last? It's just still so uncertain. But the good thing is that we're getting more and more people back in the office. I really think that is a positive. I think that's just a positive all around, whether you're a real estate owner, an employer, an employee, any type of professional. I think being in the office at some level, right? Whether it's 3 days a week, 2 days a week, some level of in-person camaraderie, communication, learning, whatever is extremely important, both for personal development, but also just, emotionally and psychologically. I think it takes a toll on an individual when you're just operating by yourself in a box day in and day out. And one of the things that I think most people want, especially people who want to be engaged, is to be engaged with others. And I think the best way to do that is when you're in the office, because then it's easy enough to walk into someone's office and ask a question, or walk into someone's office and say, hey, can I run an idea by you? It may not be as easy if you're operating from your house or apartment. Do you really want to pick up the phone and do that? So it's it's still crazy that we did that for as long as we did. We did it well because we had to, but I think, we'll see what happens come the fall. I think that will be a big turning point for all of us.
One of the other major things that has to take place, and Jessica, you may be more up to speed on the statistics than I am, but leading into COVID, New York City had somewhere, 56 million visitors, tourists a year. It's a huge economic engine for the city. I don't know what the visitor count has been since COVID, but it's probably a couple of million people or something incredibly low. But that, Jessica, I don't know if you guys study this because, it's more relevant to street retail and theaters and all that stuff than it is office. But it's a huge economic driver, and we have to see how and when that comes back. Because it's,
yeah, I was just going to say, let's leave room to talk about hospitality, but I guess tourism obviously is something that hugely impacts most of my portfolio in the city, not so much in the boroughs. But I haven't been tracking, that closely because maybe I just don't want to look in terms of how many foreign tourists are not coming. But also, we own a lot on Green Street and Soho, and we talk to every one of those retailers regularly. And, they are across the board some fantastic retailers, and they've had the hardest time and the longest, sustained suffering in terms of, lack of walk-in business, because whether or not their e-commerce is doing just fine, because, they really do rely on those foreign tourists. And, my sense, again, forward-looking, my sense, and I don't have predictive numbers necessarily, or I haven't done the research, but, I think domestic tourism, I did talk to someone who is in Orlando tourism, and this spring break was like just as robust as it had been in years prior to COVID. And I think we're seeing that across the country. The airlines are starting to report, closer to pre-COVID levels for domestic flights. And, I don't know that will impact all hotels the same way. I think people have been positively surprised to the business travel that's already starting to come back. Again, I don't know where that lands, as to getting to pre-COVID levels. So I'm very optimistic that New York will enjoy, similar levels of domestic tourism in a relatively short period of time. The big question, though, is nothing we can control, is will the other countries get vaccinated such that they can, travel the way that they used to and travel freely in the US. And so that's something that I had hopes that, other countries would be on track with the US. And if you look at the numbers, it's shocking how behind in terms of percentage, how many people don't have access to the vaccine. Now, again, it's typically the 1 to 10% in those populations that have the money and the wherewithal to travel in the US and to shop in Manhattan anyway. And those are, the folks that seem to have the best access. But it all seems like that could be a couple years till we're fully ramped up again. I don't think that COVID is going to long-term impact or detract from domestic and international tourist travel. I think that's just human nature. And as a world, we were very much in a groove of, being in contact and traveling to different places and seeing people. But, the slow pace of vaccination in other countries certainly will, I think, be a headwind for New York City.
I think I've always believed in Manhattan. I still do. I believe that what's happened is we've made room for people who have wanted to be here so badly and just were financially blocked out, now have an opportunity. And when they get here, they're going to be grateful and they're going to be hungry. And I think the city's going to turn around on a dime. And I look forward to it. The one thing I have noticed is it's become much less of a children's haven. A lot of people have exited Manhattan who are bringing up children here if they could. And I don't really know that portion, if that's really going to come back. But
it'll probably take the next, it'll probably take the kids that are
5
coming out of
years.
college or grad school and, sort of charting their pathway in the city now. to replace that population.
But the one thing I have noticed, and as far as with tourism, Wendy, what you were talking about is right now, if you go to Central Park on a really beautiful day, you have more performers than you've ever seen.
Oh, really?
It's almost better than going to a Broadway play, and people are coming in to support them, to experience it and to see them. And it really, I think Central Park has taken on a whole new form because they're going somewhere. They're not sitting in their apartments on a beautiful day. And a lot of people are coming in. So I hope that's increasing the foot traffic as well. City still,
and then
gives a
Broadway
lot.
will reopen. So when
that's-
Broadway
yeah.
reopens and those, you know, those.
They're gonna go away.
Broadway has got to reopen, and
I know.
engines of the city. And to your point, it's not even just the economic engine. Creative people are what bring life and energy to the
Yeah.
city, and they're there to be able to perform. And so it's that whole ecosystem has got to start back up.
It's
I know.
Broadway and the restaurants. The restaurants are there, and then we just need to get Broadway back. And once we do that, that will hopefully, it'll spur everything else.
Yeah.
Well, right now it's September, right? They're saying for Broadway. I really wish it was now, but
I think so. I think that's what they're,
I think it was September.
I think they keep
Yeah.
trying to push it up, to be honest. I think they're going to get them opened as soon as they can.
Yeah, that'll make a tremendous difference.
Yes.
It is, but I'm in Midtown and it's jammed. You know, and from what I can tell, maybe 20% of the people are wearing masks and everything just is feeling normal again. So I'm,
Good stuff.
great.
it is good stuff.
There might be some questions, I think.
Yeah.
We've got just one up here. What does the future hold for trade conferences and conventions for the industry?
Well, we have ICSC that's scheduled for
December.
December.
That, although that's in Vegas this year, not New York, so that you know, doesn't benefit New York. But I was pleased to see that, you know, ICSC had taken that step to gather people again this year, and I think it'll come back to Javits in 2022 for that show.
Well, I'm going in December. Nina, you going? First time, I can't wait, actually.
Yeah, exactly. It's like revenge spending. It's like revenge conference attending.
It really is. It really
What I'm
is.
looking forward to is doing this in person. I'm
I
done
know.
with the Zoom panels, honestly. I think one of the nice things of doing these panels is actually getting to spend time with each other in person, and the follow-up afterwards, and then speaking with people who are in the audience. I actually really miss that. So I'm looking forward to doing it in person. And I already started, I think from one organization, got a lineup for in-person events. So that's super exciting.
That's great. Yeah.
Yeah.
Once this is all over, I never want to have another Zoom call. I don't want to do another puzzle, and I want to disconnect Netflix. Those are the three things. I'm done.
I don't know about the Netflix.
Yeah, I'm
look,
on Netflix.
I think human nature, you know, doesn't evolve overnight. And so, you know, I think, look, technology has changed every asset class, and, you know, some more rapidly or more profoundly, you know, but in general, humans want to be with other humans, right? We're social. So, you know, if you sort of, I tend to, in terms of an investment thesis, that is an underlying, you know, sort of tenet that I always look to. So, you know, I think the economics, Wendy, to your point, like rents being, you know, 30% of what they were at the peak, or higher TI dollars, et cetera, unfortunately for investors may look different, but I think we'll be very surprised at the level of, you know, sort of normal post-COVID that we'll reach. My hope is, you know, by the end of the year, by this time next year, but you know, we just all have to be a little savvier to adjust to that as owners, operators, and, you know, people in the industry in general.
You know, it's tough, but I'll speak because I'm certain that I'm the oldest one on the call. One of the things that I've learned going through multiple cycles in New York is don't count New York out. And every time something bad happens, including this one, which was kind of devastating to New York, if you remember our darkest days, and, you know, you just and it's hard. You go, well, this one might be different. This one might be different. And you're saying to yourself, don't fall into that trap. You said that the last 2 times and came roaring back. And the
Yeah.
truth of the matter is, and listen, we're selected, we're here, we're in New York, but I'm a huge believer to everything that I think we're all saying. I'm a huge believer in New York. It's a unique place in the world. It's going to come back. And I hope you're right, Jessica, that we're all going to be whiplashed by how quickly it happens. But whether it happens super quickly or takes a little bit more time, it's going to come back. That's just the bottom line. And
I
anybody who bets against it, my prediction is you're going to be on the wrong side of that bet.
And actually, I feel like if you have, I mean, the tremendous opportunities that exist today for people who want to get into New York when the price point just didn't give them the chance to do that before, tremendous, just tremendous.
Yeah, yeah. I was at a restaurant and there was a girl, she was the waitress, and questions were asked, how are you doing? She's like, I'm so happy. I'm so thrilled to be here. Like, that's what we're going to see. You know, people happy to be here. I am.
Yep.
Which is recent. I was a little nervous a few months ago, but everything is changing. It's like a moving target right now.
Changing
but
fast, like really
Yeah.
fast. Yeah.
I never would have thought 4 months ago that Manhattan would have felt like this to me. 4 months ago, when I was at my apartment, the city was dark because there were no apartment lights on at night. It was the weirdest thing. Now it's pretty much back to normal. So hopefully everybody starts to realize they need to buy now if they're going to buy. These buildings need to trade now if they're going to trade, because that window is going to close quickly.
Yeah, I actually feel like hopefully the lack of the uncertainty now being somewhat resolved around some things, maybe, you know, as I said, sliding scale, but I hope that will spur more transactions, because it just feels like we've been in sort of a deadlock. You know, I don't know if it's coming. I don't think so. You know, there never was that level of distress that you could get, you know, these deep discount deals, certainly not in the retail space, a handful at most. So hopefully, you know, sellers will be more open to transacting now that there's clarity, and there can be sort of a coming together of views on pricing.
Yeah.
We have a question. This is from somebody, Jessica Livingston. For someone trying to get into the commercial real estate legal field, the current law student, do any of you have suggestions for networking and gaining experience in today's environment? Personally, I'd lack previous experience in the real estate finance sector. I'm finding myself in a bit of a struggle. Nina, we're turning that over to you.
Wow. Well, the best thing you could do is reach out to each one of us after this Zoom and drop us a line. And I know that we would all be happy to just chat with you, but personally reach out to me, Jessica, and I could give you some thoughts as to perhaps what you could do. I feel like joining a couple of organizations that are geared towards women in real estate has been super helpful for me in the past, whether it's Night Crew or WX. They've been organizations where I've met some really incredible people. And I think just staying positive and engaged. And it's very, very difficult in this remote environment, but I think things are changing. So once more in-person events open up, I think attending those that are most conducive to what you're looking for, I think will probably be the best way to go about it. But feel free to reach out to me, Jessica. I'll be happy to answer any questions.
I will be sending out the video as well as the contact information on everybody here to you soon. I know there was a lot of people that were unable to attend this live conference. I know you guys mentioned something about the expos coming up, and there are some interesting ones that are appearing. There is a NAR commercial event coming up in September, and I'll get that out to everybody so you can see that. That's actually, NAR is very large for National Association of Realtors for residential. However, at the Marriott Marquis, I believe on the 28th and the 29th, they are going to have a very nice large residential, and I'm very close with them, and so I'd be happy to also, Wendy, Nina, you know, Jessica, Susan, be happy to refer your names to the NAR organization. There's Hagar that specializes residential. They're there as well at the Marriott Marquis. And there's the MBA in Atlantic City, which is a very large bankers convention. And then there's the AAA, which is also a very large residential event in Atlantic City as well in December, as well as our event, which is going to be probably in 2022. We're just looking at some new venue spaces. So we will be back in New York in 2022 as well. So guys, very inspiring, informative information. I want to thank you all. Really great job. And here at the NYC Real Estate Expo and Network Group, we'll continue to share this video as a feature video on our website and newsletter. Again, guys, this concludes our webinar. We're very, very happy that you were able to do this, and we thank you so much.
Nice seeing all of you. I'll see you all soon.
Thank you.
Thank you.
Take care, everybody.
Bye.
Bye-bye.
All right.